This stock tanked on earnings. It was down 25%. We are getting a lot of questions about this in our Discord.
Yep.
Fortinet is a company that provides cybersecurity solutions. Full disclosure, I personally have not looked at this company a ton, but the good news is I think someone else on this call has. So, Daniel, are the rumors true? Someone said you bought this stock. Someone said you didn't. What's going on? What's up with this stock? What are your opinions on it? Are you a shareholder? Walk us through what causes a stock to have a monster fall like this on earnings.
Yeah, so the stock fell because they lowered their guidance for the year. And that's basically why. So I believe they were projecting something like 30-ish% revenue growth. I'm going off memory right now. But they came in and said, no, we're going to grow revenue by 22% now. Which on its own, think about that. A company growing revenue by 22% is still pretty dang good revenue growth.
Well,
so yeah, the stock just fell. I think the market was pricing in, I guess, more expectations, and then they lowered their expectations, and people, in my opinion, kind of panicked. So yeah, I added it to the YouTube portfolio.
interesting. Yeah, I'm not sharing my screen anymore, but I'm looking at their, I'll share my screen again because I'm looking at their revenue line in Stock Unlock and toggling the growth rate.
Yes.
Just to kind of visualize what we're talking about here. When you're saying 22%, is that a year-over-year number?
Yep.
Okay.
So they're expecting 2023 numbers to be 22% above 2022.
Yeah. So these are the yearly reports. So this actually lags their quarterly since this one just gets reported once per year, but you could see their growth rate on this green line here. Then in Stock Unlock, you could always toggle at the top. This is us looking at their revenue growth over time. I was also looking at the TTM. There's a lot more to look at for a company than revenue, as we always talk about.
Yep.
But this is very consistent revenue growth. I rarely honestly see the percent change quarter over quarter stay this consistent. And dare I say, it actually looks like it's been trending up. So
yeah, so
I agree with what you're saying here, Daniel, that this might be an overreaction.
Yeah, so their revenue really exploded during COVID over the past couple of years. It was an unusually high amount of revenue growth that they saw. So now they're basically saying things are starting to normalize, and we're expecting 22% growth this year now, which I thought was still great. So the market sold off the stock. This is actually another stock that I wrote about in one of our subscribers only newsletters.
There you go.
So that's why it was on my watch list. I did all of the research for the stock. I shared it in the newsletter. I said at the time that I wrote the newsletter, I believe the stock was expensive though. So I put it on the watch list. I said it was a stock I believe, you can add to your watch list. Then earnings came out. They lowered their guidance slightly. Market sells it off 25%. And I was like, okay, interesting. Brushed up on my research. Found out that the stock, after its drop, was trading for a price to free cash flow of 22. Its historical average is 27. And think about this in a vacuum. How much would you, or I guess I should word it this way. Do you think that paying a 22 price to free cash flow would be fair for a business growing at 22% per year?
Sorry, is that growth to their free cash flow numbers or their revenue? I guess it would depend what their cash conversion is. Like,
yeah, their cash conversion, their free cash flow. Well, their free cash flow grew by 70% year over year, but it's, yes. So basically, let's assume the free cash flow will follow the revenue going forward. So yes, for 22% free cash flow growth for a 22 price to free cash flow. Do you think that's a good price?
It seems fair.
Okay. I think it's a good price.
You think it's a good price?
Because
here's my thing with this company, Daniel. Can you walk me through how you understood this business? Because I have not taken a deep look into this, but I'd imagine that customer retention here is very big, understanding who their customers are. I just know that there's a handful of companies that are selling cybersecurity solutions, and it could be a pretty vague term, especially for those unfamiliar with the industry. So what was your mindset in like assessing their moat and management, or is this more of a purely fundamental based play, like trusting management and looking at their retention and growth numbers year over year?
Yeah, so I would say that this one is more fundamentals play. I understand they're in the cybersecurity space. They have a few different products. Their main one, I believe, is their firewall security. And they have an over 50% market share, and the market share in their industry is growing.
Wow.
So I don't, I don't know for sure how strong the moat is, but the numbers and the metrics tell me that they do have a moat maintaining over 50% market share and growing market share. and their margins are expanding, which is another sign of a company having a moat. And then also the insider ownership. The two largest insiders, one is the founder CEO, the other is the CTO, and they own 20% of the company. And one of the things that I said I liked about this stock is because when you see these tech companies growing at 20% plus per year in these very exciting industries, typically what you see is very high stock-based compensation going on. This company does not do high stock-based compensation. And I believe the reason for that is because the founder and the CTO own 20% of the shares.
Are they brothers? Sorry for interrupting. Are they brothers?
I don't know. But so if they're going to do stock-based compensation, which dilutes shareholders, they would be the ones the most heavily diluted because they own 20% of the company. So I believe that there is a strong focus on protecting shareholder value in this business. And they've been protecting shareholder value quite well. They actually buy back shares. And they actually only buy back shares when they believe the stock is cheap too, which is something I don't see a lot in the tech industry. So if you look at the timing of their share buybacks versus the stock price, they typically only buy back shares when the stock is down. And then when the stock goes up, they do not buy back shares. They stop.
Yeah, like this was the COVID one right here.
Yeah.
Okay.
Yeah, so I think that they're very good at protecting shareholder value. They're growing strong. They're very profitable. Everything's still growing, and I thought that the price was good. So
yeah,
I took a position.
I'm really curious if these people are brothers now, but maybe that's just my own curiosity. If someone knows in the chat.
Yeah, someone said they are in fact brothers, Jake.
Okay, that's very interesting. Family-run business. It does look like they did have some sales here, though. So it looks like they both did around a 500,000 sale, but it was a small percentage. Yeah. Airbnb has also been selling too, and like this is something I've been thinking deeply about. I'd be curious to get your opinion on this, Daniel. We do demonize insider selling a bit. However, I do think sometimes it is expected, and also depending on how long someone's been with the company for, there is a good amount or an acceptable amount of selling. So I'll go on a limb here and say my opinion is, even though they're selling, this doesn't look terrible to me. You know, they're selling small amounts. This is also part of their compensation package. So I'm curious if you agree with that or not.
This is something that Peter Lynch actually talks about too. He says there's one reason to buy, but there could be a million reasons to sell. And the only time I get concerned about selling is if it looks like the insiders are selling off as many shares as they possibly can, as quickly as they can. But if you take a look here, you can see that Michael Z, they got 11,675 options granted to them, it looks like. And then you can see that those are the shares that they sold. So it looks like they got that option package and then they sold it off, but they still owned their initial 9% stake in the company. So this is just one way that they seem like they're, you know, increasing their cash flow beyond their salaries, which I think is fair. I mean, look, it's 0.02% of the position. They're not selling, you know, 50%, 100% of their position consistently. It looks like they're just selling to increase income, which I mean, I'm fine with that.
Yeah. I wonder if we have their compensation information here. Oh, they're making a pretty penny if this is right.
Yeah, that's not a bad salary.
14 mil a year. Yo.
Yeah, that's
pretty nice.
I take that. Why not?
14 mil a year, selling millions of dollars of stock. But hey, it looks like from what you're saying, they're growing. It looks like they're honest with shareholders. You said that they're managing the share count well. So these vehicles exist in capitalism for people to create a lot of value and then reap the benefits of those rewards. So yeah, they keep on executing here. My one thing, Daniel, is I want to, more on the tech side, just really dive deep on this industry. I want to get well acquainted with who their competitors are and how moats could be understood, because that's been my apprehension for me personally touching these stocks. And it's more from my lack of time to look into it, just spending too much time coding on Stock and Lock, in all honesty, working on the tool that I should be using to invest, but I'm spending all my time building it, not enough time using it. But that is my own problem.